All right, well, good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun from TradeMastery.com, coming at you live here on Saturday, August the 27th, 2022. We had a really big drop in the S&P yesterday as markets sold off sharply, especially into the close. And you can see here the biggest red candle in 3 months, right? Always a quick rider downer. Look for the 3-month largest color directional candle, and if it's big red like yesterday, that's a signal, right? Versus all the noise that's out there in the market. So one thing on a 90-day basis, ask yourself when you're evaluating the relative strength of a given day, is it the biggest green or the biggest red day of that 90-day time interval? And if it is, that's an institutional buy or sell signal, particularly if we take out support. And with bond yields up and our markets down, and right after after Powell's hawkish comments, that was enough to drive the market down sharply. Now, what do you guys think? Are we going to have an up day or down day on Monday? Often after a big sell-off day, you get a bit of a bounce, a dead cat bounce before the next move, which will probably big move will probably be Tuesday, right? And anyway, we had a big drop. I made quite a bit of money yesterday, mostly with UVXY and SQs, but I went pretty heavy. I'm risking most of yesterday's profits on going heavy short into the weekend. So I went 1,200 in UVXY and another maybe $10,000, 12,000 worth of the other inverses like SQs and SOXS and so forth. So I'm long all these instruments: TZA, SQs, UVXY, LabD, and SOXs. The other thing we want to look at is the VIX. The VIX had the biggest green day after all that red selling. I knew it was going to bounce, right? I told you guys it was going to bounce because it had been overly extended to the downside. Remember here, every week, the last month or so, I've been saying as it kept going down, it's more and more likely to bounce. And sure enough, we had the big bounce last week. So that's a reversal of trend officially as of last week. Now the market may drop back down and chop and so forth, but we do have a initial reversal of trend because the VIX got over the 22, which was my key resistance area. And the reason was this big red candle. So I was looking for the VIX to get back over 22. It did in a big way back on Monday, but mainly on yesterday's big surge. So what do we trade on reversal days like that? Right now is a legendarily good time to be long things like SQs, in my humble opinion. I think this is a perfect reversal signal, right? This is a bullish engulfment, almost a bullish engulfment. Anyway, big candle and reversal on high volume, breaking the previous downtrend. So we got a break in downtrend because we got above that previous little swing high there. First, initially on Monday, then it kind of chopped around Tuesday, Wednesday, Thursday. Then yesterday was the coup de grace. It was a good recovery play in our short Qs ETF, leveraged ETF, SQQQ. Similarly, what do you see if you look at its counterpart, TQQQ? In our TQs, you can see a really big red candle. So a break of the uptrend in this. That's a head and shoulders pattern, right? Classic head and shoulders with the declining neckline. So it's a bearish reversal signal. Semis have been really exciting to play lately. SOXS, I went long yesterday a bit to start a position off. If I can double my money from 40 to 80, I'll be a happy camper. I don't know if we'll get all the way back to 80, but 60 is a reasonable exit target. Does everyone see why the 60 is a reasonable exit target? It's because it's in the middle of the range. And by the way, that's a quick, oh wow, big turnout this morning. Aloha, good to see you guys here. A good exit target if you're playing a pivot is the midpoint of the previous entire range. You don't expect it to get all the way back at the top. That would be too easy. But about the middle of the range, mean reversion pivot would be a good exit target, like 58, 60-ish would be a really good exit target. So what that means to you as a trader is you want to develop a position sizing or a how to add to the winning trade approach so that you're leveraged in heavily in the early part of the run and then tail out of it during the latter part of the run. So that's good. Hey, William, what time? This would be over, say, a smart question, 2 to 3 week. Maybe 3 week time period, because that's about how long it took it to go down. So we expect it to recover in about an equivalent time frame. So maybe 3 weeks or so, maybe by end of September would be my call for that. Also, be sure to, well, I'm sure to short the Russell here with our TZA. That's our small cap bear triple, and you can see it's currently got a really big green candle recovery right here. So these are the kind of things that I teach, not just for day trading, not for day traders only, but my live room covers swing trading charts and exit targets and live updates as well. So that's something to take advantage of. Just a friendly reminder here, I do have the live room is on sale until Sunday. I'm not going to repeat this offer anytime soon. I only do this like maybe twice a year, maybe 3 times a year, 2 or 3 times a year. So this is one of those times where you can get a whole year of live trading room access with me for just $9.97. So that's a really good deal because you get all these hundreds of hours of training, no scanners to buy, no software to buy, no special courses to buy. All you need is live room membership with me to get my best, and that's just $9.97 a year. Now there's not a link on the website. It's I sent it via email, and I'll put a PayPal link here. If you want the link, just hit me up with the support ticket, or just email me, ken@trademastery.com. But I just posted a PayPal link in the chat box. So if you click on the word chat, and there's a kind of a speech bubble, that has now the PayPal link where you can get a whole year. That's over 300 hours of training with me for just $9.97. And I don't do any upsells into courses or other programs or any of that. All you need is a live room. That's my best. So that works out to just $96 a month or $86 a month. So good deal. Anyway, back to our regular schedule programming. We're looking at swing trading charts right now. We're going to be looking at intraday charts in just a minute. So UVXY, I made a whole lot of money trading this yesterday. I was only up to, I think, 1,200, maybe 2,000 shares day trading, but it was enough size to make me some money. What I like about this reversal in UVXY is big upside, right? It sold all the way down to 9. With the previous high at 18, exit target would be right around 14 or so, right? So my goal is to be in at least 3,000 or 4,000 shares by the time it gets up to 12.5, 13, and tighten up trailing stop. You know, if it does a logarithmic curve and starts to go back down, I tighten in the trailing stop right near 13 or so, so 13.50 or so. So now's a jump start. I remember I've been telling you good folks here for the last couple of weeks, keep an eye out for reversal in the inverses because it's coming soon. And I was right. And hopefully you guys made even more money than I did. I certainly hope so. I made a few thousand, so it's good. Anyway, let's take a look at these charts. Now, again, if you're currently, what this all means to you as a trader is, if you're in a nice big winning play like Deere, right? This thing ran, let's see, we'd mentioned it earlier, and it ran all the way from, I think it was 306, 307, all the way up to 390. This is a good place to sell, stick a fork in it, because you have a bearish engulfing, and it's right near 400, and the market's going down. So this has been a really good example of a 45-degree angle up, but with a bearish engulfment, that's a sell signal if it gets under the 380 come Monday. So if it gaps down to 377, sell, sell, sell is the signal. EXTR has still been good for you guys. See a question from BC. If you have any questions, type them in the chat box, and I'll endeavor to answer. EXTR still looks good up here. Apple's starting to reverse, and hats off to Carter, who mentioned the top on the Finance News show back at the top. He called exact to the day. He's my favorite guy on CNBC's Carter Wortham. He called the top like 174. So good job, Mr. W. And a nice big ass drop in Apple. Now, if I were long Apple, which I'm not, but if I were long Apple, I'd sell it all. Not a trade recommendation, but personally, I would sell it all at say 162. Netflix and Disney in decline. Now's a good time to run for the exits, unless you're in inverse instruments. Let's take a look now at some of the intraday charts, because these are really exciting. Especially my favorite chart from yesterday, UVXY was on this thing all day long, and this was so easy to trade, especially this last run. as the market was capitulating and selling off. I was in well over 1,000 shares in and out of this thing, trading 400 and 500 share blocks. The way that I trade this, dozens of times I throw lots of darts at it. I'll tell you, I trade 400 to 500 share trades, and I teach traders how in my live room, but I'll do 400 or 500 shares at a time with like a 6-cent trailing stop, maybe up to 8 cents, really tight trailing or hard stop. I kind of mix it up, and I build positions as high as say 2,200 shares. And all it takes is, if you get $1 out of 2,200 shares, that's a lot of money. So if you get 50 cents out of a couple thousand shares, that's also a lot of money. So it's a good idea to build slowly and then scale in once it starts to prove itself. And this is a really good example of success with UVXY yesterday. Another splendid chart was our semiconductor short, SOXs, right? That's an even tighter, cleaner range line, right? This thing ran all the way 37 to 43. I was trading this all day yesterday, not as much as I was UVXY because it's pricier, and I don't do 500 shares at a time in this. I just do like 100, maybe 200 shares at a time, but still, it's good for a bit. And SOXS was a wonderful chart to trade yesterday. Now, the worst way to day trade this market would be to be trading under $10 low float, crappy, cheap stocks that morons in chat rooms pump and dump to their members. So don't be trading under $10 low float, crappy, choppy charts. This is a terrible market to do that in. Instead, tell me, but I think this is the kind of chart to go for. That's what I made a lot of money with yesterday, was this one. And I was trading mostly UVXY, and then also SQs as a close, near and dear friend, a close second. Anyway, this thing went 37 to 42 and change as well. So I hope you realize, even as the finance news commentators are doom and glooming it, they won't tell you about these kind of charts. Why is it that no financial news commentator in the world will tell you about things that go up when the stock market goes down? It's because they're not paid off to do so. They're paid off by Wall Street, which works with big companies. And so they only say, well, let's look at quality oversold stocks with low multiples and high dividend yields and derp, derp, derp. No, epic fail. What you want to do is short the F out of this market like I did. I'm a pro. I know how to do this. You're not going to hear this on financial news TV. And I'm a total stone cold expert at trading inverses. I've been trading these for over 16 years, since before the flash crash, the original flash crash 12 years ago. Whatever. I was trading VXX profitably with P&L proof. So I know how to trade inverses during sell-offs. It's one of my core areas of expertise, and I believe I'm better at it than anyone else you'll find in the industry. As for P&L proof of anybody who purports to do so, I'm always happy to show mine. Like I sent you guys screen caps, right, last week in the email. Anyway, these are the kind of charts that you want to be specializing in during a market downturn. I'm the right person to teach you how to do that. So join my live room at trademastery.com/live. Yeah, good point from Wendy saying there's a lot of damage Friday if we bounce Monday or Tuesday. Is it a good short? Only at new lows, because it may bounce up and drift higher for a while and then roll over. So either at a rollover at a test of the previous day's high and a fail to break it, or preferably just a dead cat bounce and then takes out new low. That's the short. So yeah, good question. How high do I think SQs will go? My target's 50% of the previous range. So that's a good question. A trader asked about how high do I think it'll go? I don't predict it, I react. I have no idea how it may gap down to 39 and sell off to 10. Who knows, right? I don't purport to have a crystal ball. My exit target, though, on the SQs is roughly on 54 or so. 54, 56. That's about midpoint in this region. At least that's where I'd look to take initial profit. And then if it resumes its uptrend, I'd go for it again, because lots of upside in this, right? Lots of upside. Back during the pandemic sell-off and all that, a couple of years back, this thing was up at 140. Now it's 40. Gold really got sold. But look at the upside, split adjusted in nat gas inverse. UVXY is hollering at my traders. It's a great trade over 8, and it was. There's lots of upside in that as well. If you look at the 1-year chart, you can see So that looks like a pivot to me. Looks like a bounce in the making, right? So these are the kind of charts that I like to specialize in for swing trades as well as intraday trades. You know, where I do both. I try and keep them separate. I try and do most of my day trading in my day trading account, most of my swing trading in my swing trading accounts. But that was my favorite thing to trade yesterday, and did really good with it. I did over 57 round trips yesterday, all told. So that's not a lot for me. A lot for me is over 120, but I still did over 50 round trips. And this thing was easy. You just throw darts at it all day long, right? I mean, it's just a piece of cake. Right? Now, this illustrates one concept, and that's the avoidance of groupthink or the public dumb money finance news TV channels. The stock market is selling off. What are we going to do? Well, you short it, okay, Sparky, or you buy things that go up when the market goes down, like your inverse instruments. You don't look for oversold stocks. Well, the stock went down so far, it may bounce. Yeah, and it may just keep going down after it bounces a little bit too. So always smarter to trade in the trend. The trend is your friend until the end. And in this one, I don't see any end in sight just as of yet. So good play. Hey, Avi, that would be a no. Sorry. Trader had already trialed my room 4 times and still hasn't joined as a member, and he's asking to trial it again. Dude, come on. It's only $147 a month. It's a bargain. So anyway, I'd like to oblige, but to be fair to everybody else, I limit trials to 1 per person, or in your case, 4. I think that's more than generous on my part, right? You should be fair to me as well. I'm a professional. I deserve to get paid. Anyway, speaking of which, I do have the annual access. The 1-year pass is only $9.97. So, you know, I'll tell you what I think I'll do. Well, thanks for reminding me, Avi. What I'll do is I'll meet you halfway. I'll do a free open house trial for everybody for the next 3 days. The last 3 days in August, I have to remind myself. Somebody please send me an email reminder. But I'll send I'll send you guys all access for the last 3 days of the month, so that way you can see how good my alerts are, and remind me, and I'll still extend that $9.97 price because you're here asking. I'm not going to extend that publicly, but privately. Maybe send me an email or a support ticket. So Avi, yeah, I will give you at least a few days, and everyone will do open house for the last part of the month, the Monday, Tuesday, and Wednesday remaining in August, and I'll give you that time as free so you can take a look at my alerts and see just how well they work. And one thing I did do by popular request was I screen recorded or captured, say, the first 15 minutes of a session I did just a couple weeks ago. And that video capture is on the live room page at www.trademastery.com/live. And you can scroll down and there's like the first 15 minutes. You can see a typical how I teach to traders, and I've done so for over 22 years now. Let's see. And no, Wendy, you don't have to send me an email on the free days. Just if you could just send me a reminder to get that email out to everybody, I will do that this weekend. I'll try and remind myself too. But yeah, you guys are all welcome to be my guest for Monday, Tuesday, Wednesday. Just somebody send me a reminder email so I've got it to remind me. I got so much work to do, so many new members joining, and it's just me running the place. That's why I can afford to make the pricing so low. I don't charge, you know, like thousands of dollars for the live room and other thousands of dollars for a course, and you know, selling scanners and software and all that kind of crap. I like to keep it inexpensive and high quality and high professional grade training for you guys. So very good stuff. Let's see a question. What price would prove me wrong on UVXY? Well, just under the 9, right? The price that proves a swing trade wrong is always a loss of the 2-day support, meaning today and yesterday. So 2-day support on this chart would be $9 a share, which is a whole number. One thing that you'll learn once you join me as a live room member is that I always use whole number support and resistance. So I was buying this off the 9 support yesterday, and it ran like a son of a gun, right? Where's the long call? 925. Here you can see right here. 925 was my long call. These are my long breakout price points that I post for everybody ahead of time. Anyway, I told them after it dropped here, I said, let's go long at the 925. And it went up, you know, over $1 from there. So a good play. Now, as you're looking for entries and exits, one thing I urge you to do is make sure that you've got a very easy to follow, simple step-by-step process in mind to make it easy for yourself as a trader. You don't want to complicate things by trying to use hotkeys and trading thousands of shares. You want to use one triggers the other order, so that once you put on a trade, you automatically have a trailing stop in place to cover your backside, or a hard stop if you prefer, and keep it simple. And you automate your trade process. So that's good. Oh, thanks, trader. Yeah, sure thing, Avi. Good, smart question from John. How long can I hold inverses before negative decay? Oh, contango, also known as contango. Bum, 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 bum. Contango. Well, it's even one day you start to have some decay. So, but it's negligible when you have this much upside. So the decay price against this might be, I don't know. I'm just guessing. So I honestly don't know, but I think the contango might be like 8 or 10, maybe 12 cents on this. But if you can get $1 out of it, it more than offsets it. So that's a good question. You don't want to hold these things for months or anything, but I do swing trade them all the time. And I scale in and out every 2 or 3 days, so I don't keep them more than a few days. So that's kind of my practical limit, is maybe a week at the most, 3 to 5 days, because I don't want to absorb decay in the contango. Yeah, good question. Now, one of my smart traders, Ari, and I've got a lot of smart traders like Ari, Mick, and the rest of them, Tom and so forth. LabD is a really good play. Our biotech inverse, LABD, Lima Alpha Bravo Delta. LABD did a nice breakout above the previous day's high, right over the 1920 or so. Again, that's right near the whole number, the 19. It went up to the 20, installed, and then it ran up to the 21, and even did a little bit more into the close. So really good run in these charts. These are the kind of charts I like to day and swing trade, because they're not too wild. They're not like those cheap under $10 low float junk POS piece of junk stocks that pop and drop and wash everyone out and cost everyone lots of money. Those are stupid to trade. Morons trade stocks under $10 a share. Professionals trade things over $10 a share. Just saying. Ask any Wall Street firm. They forbid people from under 10. They're what they call single digit suckers plays. At least that's one of the market making firms call them. Single digits are for suckers. Single digit stocks are for suckers, because they pop and drop. They don't have any all day long consistency. Heck, you're lucky to get any. How many of you have seen this? Is pre-market, it runs up like a $3 stock, and then in market, it just sells off all day. That's not what you want to trade. If you want to trade for a living, you want to trade things that go up and hold their own and keep going up throughout the session. That's what I specialize in. So you're not going to see that chart pattern out of a $2 or $3 stock, are you? Almost never. In these wild durations. The other hazard of trading cheap ass stocks is they get halted all the time, right? 2 or 3 halts. Usually the first couple of halts may be favorable, but after halt number 3, you're on your own, Sparky, and they crap out. So trading single digit stocks are for, I won't call people names, but I'll just say amateurs trade the cheap stocks because they're undercapitalized and they think they're getting a bargain. It's fool's gold. It's not. What you want is, even if you're only trading 100 shares, like I frequently only trade like 100 or 150 shares at a time of SQs, but I may trade it, 8 times a day, but still 150 shares at a time. And maybe it runs 80 cents. It's still, $70, $80 I can pocket. You do that, repeat that over and over again, it adds up. So there's nothing wrong with trading small size. It's much more intelligent, in my professional estimation, to trade smaller share size of consistent uptrending instruments than it is to trade thousands of shares of cheap ass gambling $3 pop and drop crap stocks that get halted and all that kind of crap. So, and front run and all that. So, and yeah, Afshin saying, is it true UVX so I can jump tenfold in a bad time since around 10 it can go up to 100? Yeah, that's true. It can. That's why I traded. I traded TVIX. I bought 54. Now that's when I did hold several months, because I bought 54. I sold 940, I think it was, right? I knew the 1,000 was going to be really major resistance. So I sold on the way down. I'd gotten in weeks ago at like 54 and I sold 940. That's really big ROI, right? That's hundreds of dollars per share. Unfortunately, I'd only traded 3 shares, but still is enough to double a small account and then some. Yeah, good questions. Hey, Joe's asking, Ken, what's this trading platform? It's the old version of eSignal. eSignal Classic. I've been using eSignal for 20 years now. I used to use Medved's Quote Tracker, which is great. Jerry and Mike Medved came up with a really good charting software called Quote Tracker. I think it was acquired by Ameritrade or something, but anyway, after that, I switched to eSignal back in 2001, I think. So it's been a long time. A question from a trader, does the 2-day rule apply to other time periods? 2 hour a week? Yeah, I always use the 2-day. the 2-day chart is my bread and butter. So I always make decisions on my trades based on 2-day highs, 2-day lows, price elasticity. What's the previous day's trading range look like? What's the range? What's the open range breakout length look like? And what's the open high low close profile look like relative to the current day? So basically I am risking most of, if not all of yesterday's profit on going heavy short into the, well, not heavy short, but 1,200 shares UVXY. For me, that's a little heavy. And then another 10 or 12 grand worth of SQs and TZA and SOXS all put together. So I'm around 24,000 short the market going into this weekend. I may well get back all of yesterday's profits if the market bounces against me. Another quick tip before we wrap up. I never sell a gap down unless, let's see, I always sell a gap up if it starts to go back down. So let's say, for example, my UVXY. Always, it helps, I found, when it comes to making money as a trader, I always find it helps to have the price that proves it right, the price that proves it wrong in the back of my head, if then conditional. So if, say, it gaps up to 11 and then starts to go down, then I won't sell it all, okay? I'll take my profit. If it gaps down to, say, 950 and holds, I won't do anything. But if it goes down, say, another 20 cents, then I'll start to scale out of the position. So when we gap up in your favor and it makes a bear cup or descending triangle, it just starts to go down, sell it, take the money. You can always get back in over a new high. If you have a gap down and it holds, you don't panic out because it gapped down. You wait until it moves, and if it goes down another, say, 20 cents or so, then I'll start to sell. But if it starts to go up, I may well buy some more because it may fill the gap and put me even in more money. So it's a good way to consider your trades. Yeah, Bill, I do use 1-minute candlesticks all the time. 1-minute candlesticks. 1 minute helps. Is it feasible to only trade inverses as on your list? Well, no, my pair trading approach is I trade both, so I trade both the long and the inverse. So for example, I trade SQs and I also trade TQs, When one goes up, the other goes down. Look at this. Now, when one goes up, you want to keep buying it. And if it flips over and goes down, then you want to trade its opposite paired instrument like TQs, right? Same thing like SOXS. Ba-da-dum, charge. Nice big run. Versus SOXL. So they're exactly inversely correlated. And so when I'm looking for my next entry, I always day trade. I'll put in an entry, 15 or 20 cents above each of them. And that way I capitalize on whether the market goes up or down, I want to get paid. So I like to put on trades that are on just a little bit on the north side of, or just higher than the current price for both instruments. So that way, if it keeps going up, I'm in the money and it goes up. If it goes down and the other one goes up, then I get in that one instead. And that one goes up and I make money. So you're trying to figure out how to leverage using a pair trading approach. You may have seen my article in Technical Analysis of Stocks and Commodities magazine at traders.com on what I called arbitrage. That's why another way of saying this is arbing, or arbitrage your ETFs. That's another way I teach how to trade. So anyway, that'll do us for now. Do be sure to join. And a quick bonus I'm going to add in for those of you who join the annual access. And if you want the links, order links, just send me an email, ken@trademastery.com, and I'll get back to you today. I will for for everybody here today, for my house list, and I'm down to, I think, only 3 spots left or whatever for the first 10. But for you guys, since you're here live, if you order today, and this is not for those of you watching this on YouTube, but only for those of you who are live, and I will double check. You guys, no matter how many of you, a really big turnout today, more than 10 can register. If you are here live watching me right now, which all of you are right now, if you're watching this on YouTube later, you don't get this. But for all of you who are smart enough to be here live, you can get this as a bonus. I'll do like a 10-minute trade critique video. You can send me a screen cap or whatever, or describe a trade that you're in, and I will tell you how you might have been able to trade it differently. Hopefully, would I have traded it all in the first place? What are some of the improvements you could make? And I will make a video for you, personal, just for you, a video critiquing one of your trades. And that's a really good bonus because you can kind of get inside my mind and ask me questions about, hey, Ken, I bought, whatever. Let's say I bought Apple here, I bought Ford here, or I was trying to day trade NEO or US Steel or Bed Bath & Beyond here, and I got stopped out. Is there anything I could have done differently? And I'll give you some countermeasures, some things to look for to help you stay out of trouble. So that's a bonus video that I'll give you. And again, just a reminder, we do our live room. I'm not going to read all this stuff 5 days a week. The main point is you can get a whole year with me for just $9.97. And no upsells, nothing else to buy, no courses, no scanners, no software needed. So it's an all-in-one inclusive price, and you can order up to 3 years. You can book up to 3 years at that. So anyway, that's our annual access offer, and it's a really good one too, because hopefully I've proven myself that I generally know what I'm talking about, and I'm a real money trader. I trade millions of dollars worth of stocks and ETFs every year, 41 million last year with P&L 1099 proof screen cap on the front of my Trade Mastery site. So anyway, you guys take care. Let's see, a question from John, do I take flat percentage loss and get out? No, I'll scale out like 80% for a swing trade. I'll sell 80% at a loss of the 2-day low, and I'll sell the remaining 20% if it goes down another 30 cents or so, 40 cents. So I use the 2-day low, I scale in, and also for the winners, I scale in, I build the trade after it takes out a 2-day high, at least say $2 above where I first got in. I'll usually double down and I martingale into the trade. So I scale in at 2-day highs and I scale out at 2-day lows. And I found I'm very happy with how that works because it's unambiguous. You don't have to calculate percentages. You don't have to look at squiggly lines on the chart and try and figure stuff out. It's very simple. 20 or 30 cents below a 2-day low, I sell. And on the flip side, 20 or 30 cents above a 2-day high, I buy. And that's been a very satisfying strategy. So hey, thanks, folks. All right. I'm going to wrap up for now. Thank you. Have an outstanding weekend and trade smart. I hope to see you in the live room. If you have any questions, do feel free to drop me an email at ken@trademastery.com, or even better, just click on the support tab at the lower right at trademastery.com for Zendesk help ticket, and I'll answer you hopefully later today. So join the live room for a year. You have my word, it's very well worth it. That's less than what I used to charge for a 2-day seminar. And you get a whole year worth of live training. We meet from 8:30 in the morning, or I'm there early at 8:30 in the morning, all the way till 11. And then we also meet from 3:30 till 4. And of course, I always show up during any 2 o'clock FOMC or other important meetings for us to walk through the markets as well. So I'm there for you. I hope I can be of assistance. I'm Ken Calhoun, UCLA graduate, Money Show speaker, award-winning stocks and commodities author, still kind of a struggling saxophone player after all these years, and having fun with it. So you guys take care, and do join the live room for the annual access pass today. I'll see you there. Bye for now. And it's really, you have my word. I would do it if I were you, if I were in your shoes, I would definitely do this. It's a good price. It's just $9.97 for hundreds of hours of live alerts. So, and you can ask about charts of your choice too. So anyhow, take care. See you next time. Bye for now.